Thank you. Morning, everybody. So my name's Graeme Smith. I'm a managing director at AlixPartners, which is a global consulting and advisory firm. And I spend my time working with people in the restaurant, hospitality, leisure sector, helping them with M&A transactions or raise money to grow their business. So I'm going to cover a few topics today, really try and give you a sense of what are the overall kind of activity levels in the market, where has that activity been, which countries have seen the largest deals, and what M&A strategies do we see being deployed in the market. And then also pick up on some of the trends that we see in the year ahead. Little did I know that I'd be following two pure experts in what the trends are in the years ahead when I wrote this. So I'll wait and see if I've got some of this right, so we'll check that at the end. But why is this important? Well, what's the one thing that's better than actually, doing a job that you love? Well, I think it's doing the job that you love and getting rich. So one of the great ways of doing that is running a great restaurant business, growing it and selling it. So here's the relevance to all of you in the room, and if I get the chance to help you with that in the future, then that would be great. All the data we use today in the presentation is taken from Merger Market, which is the global data source, which is very common in the investment world. So first of all, let's just take a look at what's happened over the last kind of 5 years. How's the market evolved in terms of activity levels and deal size? And we see, first of all, in the chart, we see how deal volumes have grown over the last kind of 5 years. In 2019, we see pretty steady performance over the last 3 years or so, but this represents a 31% increase over where we were 5 years ago. So a step up in activity, but then a resilience over the last 4 years. But within that, what we can see is if we look at actually what's happened to deal sizes and deal value, of the smaller deals, those that we categorize under $1 billion in size, okay, very steady rise up to 2019. But when we start to factor in the larger deals, those deals which are over $1 billion in size, what we can see in 2019 is a real kind of strong performance and a consistent step up over the last 3 years, leaving aside some monster deals that were done in 2016. But then actually, if we look into the data and look at what's happened to what we call the median deal size, so in terms of look at those averages, year on year, what we're seeing is the values of the deals in this sector and this industry are increasing. Now, that's really great, because what that means is that we're staring into a very kind of vibrant, a very active and robust investment market. So looking now and seeing, well, how's that translating into a global sense, and who is it who's spending the money? So if we look at this first chart, what we have here is the smaller bars represent those kind of cross-border international deals, and the larger bars that we see there on the chart represent the domestic deals, the deals that happen within country. And what's really clear from this is that the restaurant market, when it comes to M&A and deal activity, still remains a broadly domestic concern, which is no surprise, right? Because people grow their restaurant businesses within a country, and that's generally the way that they look to develop and they look to grow. But what I would say is in our dealings with investors and the conversations that we're having with them, more and more people are really looking at what growth can be possible outside of their home country. Particularly if we think about the UK market, very, very competitive market. Now what people are looking at is saying, well, if the concepts that work really well here, where else can I take them? How do I take them overseas? So I think as we look forward, we might expect an increase in that cross-border deal activity. And who's buying these businesses? Who's most active in the market? And we split this between what we call strategic buyers, so this is other restaurant businesses buying other restaurant businesses, and financial, so primarily private equity. And what we can see here, if we look at the chart on the left-hand side in 2015 and how that's developed to 2019, is we're starting to see an increasing presence, an increasing activity from restaurant businesses buying other restaurant businesses. And this is quite a natural development, because what we'll see is private equity coming in, tending to be first to a recovering market and backing businesses to grow. And then a very natural exit for private equity-backed businesses is then to sell to trade. So as we see this economic cycle develop, very natural to see the strategic buyers really start to take an increasing share of the M&A market. Now, saying that, private equity still remain incredibly active and are responsible for some of the largest deals that we've seen in recent years, and actually one of them mentioned before in terms of Sweetgreen. Now, one interesting trend that we saw coming out of this when we started looking at the data is that we've really started to see a shift of deal activity from a market dominated by North America in 2015, now moving across to a market where actually the European region is the largest by deal volume when it comes to M&A. Now, again, this actually makes sense, because the North American market was the first one really to to recover and start growing again. It's often one of the markets which is a leader in some of these trends. So what we've seen there is where the North American market has led, then that activity has shifted across, and the European market has followed. When we look into some of the particular countries themselves, what we also see is a bit of a difference in terms of who's the dominant investor in particular markets. Private equity, for example, leading in markets like India, Spain, the United States. But then the strategic buyers, the trade buyers, then being more dominant in Australia, Canada, and Japan. So there's local market dynamics at play in each of these areas. So then we've taken a look at how have deals evolved and developed by region. So first of all, looking at the European market, what we can see here, if we look at the chart, the different shadings across the map there, from light to dark, show where deal volumes have been higher. So the standout deal activity region in Europe has been the UK. It's the darkest shade on the map. But not only that, when we look at what have been the 5 largest deals in the last 5 years in the region, all of them have been in the UK. You can see them with Green King, Costa Coffee, and Pret, some well-known names there. But also what's clear from this is actually 3 of the deals within this top 5 are pub deals. And pubs are almost uniquely British invention. And what happens in the pub deals is they also tend to own their real estate. So that really kind of boosts the values of these transactions. So what we've looked at is said, okay, well, let's adjust for the fact that actually France and Spain isn't awash with pubs. What does that do when we remove the pub deals from the market? Well, we can still see that the UK is still the most active place by volume and has 3 of the top 5 deals in the year there, with Wagamama also getting reference. But we see that France and Spain now have 2 of the top deals in the last 5 years, being the Burger King acquisition of the Quick restaurant chain, and also the private equity firm PAI investing into areas coming out of Elior. But looking at those businesses, then we see that kind of QSR, food to go, as being quite dominant deals when it comes to size in the European market. So stepping over now to kind of Asia Pac, what are we seeing there? Well, if we look at the shading, what we can see is that Japan and Australia are the most active markets from a deal volume size. But actually, if we step over and see, well, where have the largest deals been taking place, then it's actually China, South Korea, New Zealand. So quite a spread. Now, what's different in this market compared to the European market is that each and every one of these large deals is essentially a franchised deal. Whether that's businesses such as Restaurant Brands in New Zealand, which operate a multitude of brands, or the deals for dominant franchise partners on McDonald's or Starbucks. And this fresh capital coming in to really kind of help these regional franchise champions to grow. So definitely a difference looking at the Asia-Pac region compared to Europe. So if we look across to North America, now, no great surprise, the USA dominates the North American market when it comes to deal volumes, accounting for over 85% of activity. What's also clear as we look at the deals, and particularly the large ones, is that the QSR market is very highly developed in the US market, and that's driving a lot of those large deals. And these deals have really been characterized either by private equity funds, family offices, by backing franchised expansion, Krispy Kreme, a great example of that, or brand consolidators really looking to kind of expand their brand portfolios, such as Inspire Brands acquiring Sonic, or RBI, the owner of Burger King, acquiring Popeyes. So taking all of that, looking across the market, looking globally as to the transactions which have taken place, what we can see is we see three dominant M&A strategies that really come into play, and this is globally. The first one is the private equity-backed rollout, and this is private equity finding a concept that they believe in, which they believe has great growth potential, and really providing the financial capital to help grow and roll out and expand that business. Some of the recent examples over 2019 on the page, but a great example of that being Mura backing Grupo Dregaluz in Spain. And that's a very, very common M&A transactions we see across the data. Now what tends to follow from that is we get deals that really look at domestic consolidation and expansion. What are the deals as a business matures to then really consolidate and establish its position in its core market? And again, some examples of the standout deals over the last 12 months in that area. One of them I'd call out there being the IPO of Loungers in the UK, really having established itself as that kind of all-day dining leader within the UK market, turning to the public markets with a flotation to get in the capital just to really establish and consolidate that position. Again, a very common M&A strategy that we see in the data. And the final one is taking it one step further from that, is when the money comes in to really back the global expansion of leading brands. So some very well-known brands there that you'll see and you'll recognize from your everyday life. Thinking about JAB backing Pret-a-Manger, predominantly in the UK market, but having got that foothold in the US and using that money to come in and really back that global expansion. Costa Coffee with its acquisition by Coca-Cola, and then using that whilst already a global business to expand more quickly using the Coca-Cola network. But what's also clear as we look at that global expansion is the dominant form of securing that global expansion is using the franchise model. So all of those big global brands that you'll recognize every day, franchising is the dominant way that they use to expand their businesses overseas. And actually, talking at dinner last night and other things around this conference, then, that's a very common watchword is how do you do that? How do you find the right partners? But it's absolutely there to see in the data for M&A transactions and global expansion. So taking this forward into what we believe will be driving deals in 2020. And here are just some of the trends. It's not about a business being specifically in one of these areas, but these are the topics that come up when we talk to investors when they look to perform diligence on a business to help back up their investment case. What are they looking for? How do they make money, essentially? So the first thing is experiential. So as people have reached peak stuff, as people are looking to how do they spend their time, it's okay, well, how do we create a destination, a venue which has that experiential element to it. Some of it might be competitive socializing, where the actual act of what you're doing there is the experiential aspect of it. Some of it might be the open fires that we saw with some of that fire cooking. There's that theatre around the visit to the restaurant itself. But it's certainly an area which is incredibly important when it comes to seeing growth in the coming years. The next point is sustainability. This is where I start to get some comfort that some of the things I'm seeing are some of the things that the very experienced trend spotters are seeing. So this is good news. Sustainability, again, it's not about having a restaurant that's all about being sustainable, but as investors look at a business, they want to understand, well, are you confident on your supply chain? What are you doing about packaging, about food waste? Because in the end, it's what consumers care about and it's what consumers want to know. But I think that authenticity is really important about this. It's not just about putting a poster on the wall. This is, businesses need to really kind of live and breathe this. Next point is technology. And I think, look, we all experience technology in terms of, well, how does it make our own interaction as customers better with a restaurant? How can we order quicker? How can we pay quicker? And that's that kind of customer journey which technology is helping to improve and drive sales. But the thing that we hear actually more and more now is there's a war for talent in this market in terms of people wanting to recruit and retain and train up the best people. And this is where we're seeing actually technology having as much investment as that front-end experience. How do we make that employee journey easier? How do we make our employees' lives better and therefore improve employee retention? Because high employee turnover is such a drain, such a cost for businesses. So anything that can be used with technology to help improve that has a direct impact on the bottom line. Next point is convenience. It's about serving the customer with whatever they want, whenever they want it, and wherever they are. And within this, we include delivery. But it goes beyond that in terms of, it's not enough now simply to have a high street located restaurant. It's okay, well, how can we serve that and how can we have our food maybe in a convenience store? How can we make the most of third-party delivery? How can we take that into the workplace? So, that convenience element of it is about looking more broadly about how you can reach the customer. Health and wellness, again, you hear it time and time again, people are becoming much more aware of it. And what we mean by this is, again, not about having a health food restaurant, but as was put on the screen earlier, if you've got Burger King offering a plant-based Whopper, then, this is now hitting the mainstream. So, again, when it comes to things like, veganism, having vegan options on the menu, just takes away that issue around it, almost that kind of vegan opt-out. You need to be able to present the fact that you can cater for those different elements of your customer base. So if you're attracting groups, the group will come. And the final point to call out, and this is one which will be familiar to all of you in the room, which run your own business, it's about operational excellence. Whilst there are all these very exciting things going on, in the end, the marketplace is incredibly competitive. Costs are rising. This isn't getting any easier. So people, really need to focus on their operational excellence to make sure that the success of the business is seen in the financial performance. But also importantly for selling your business and getting rich is that actually the big trade buyers, so the other larger restaurant groups, are looking at how they can also acquire successful, growing new concepts, not simply just to get the brand, but also to try and bring in-house that operational excellence, that know-how. How do you make that successful and keep the essence of that business and improve their business too? So just in conclusion, the global restaurant deal market remains in good health, and investment funds continue to flow into the industry to drive growth. The market is incredibly dynamic and businesses just need to make sure that they're on top of these key trends if they want to secure new investment and achieve a high value when they sell. Thank you.
Insights. Thank you very much. Just a quick question.
Sure.
If you had to pick one player to bet all your money on for this year, biggest deal, who's going to get it?
The biggest deal?
Yeah, biggest.
Oh, well, look, the one player that continues to impress and amaze me is McDonald's, right? If ever a business has managed to kind of, reinvent itself, and in a world of increasing focus on health and wellness and well-being, is making a ton of money still selling burgers.
Yeah.
Great business. Whether it will be the largest deal in the market next year, who knows?
We'll see. So the money's on the golden arches.
That's
Thank
right.
you very much. If you have any questions, you'll find him around later, ladies and gentlemen. Graeme.
Thank you.
Thank you. Mr. Smith.